In this video, I'm going to talk very briefly about some underwriting aspects for disability income insurance policies. One of the concerns that arises for a disability income insurance policy pertains to moral hazard and morale hazard. Moral hazard is referring more to specific choices that an individual would make as a result of having an insurance policy. So if a person has a disability income insurance policy, and they are essentially more likely to engage in risky behavior, and or they are perhaps contemplating, at what point they could sort of sustain a disability to get the insurance coverage. That's more of the moral hazard idea. The morale hazard is more of a non-conscious, lower incentive to work when you know that there's coverage. So it's not so much a conscious choice as it is, less incentive to sort of persevere and find a way to work, that sort of thing. And so when evaluating the disability income insurance policies, that's something that the companies that issue such policies are concerned about and try to structure their policies to try to limit that. And that's one of the reasons why coverage limits typically are a little bit lower than full replacement of the earnings that would be lost with disability. Also, underwriting costs are going to vary due to age and gender. So the disability income insurance company is going to be evaluating basically the probabilities of disability and how they change relative to age and gender. And the higher the risk relative to age or gender of a disability, the more expensive the policy will be typically. Also, occupation classification will matter. So the type of occupation involved will be classified basically by risks of a disability, and that will affect the cost of the policy. So for instance, if a person is employed in the construction industry, has to wear a hard hat, basically the reason you have to wear a hard hat is because things could get dropped on your head, which basically means there's higher risk of something going wrong and you getting injured, or the person getting injured. And so that's going to involve higher risks of a disability that affects income, and therefore that would lead to a more expensive policy. If the person is working in a typical office environment where there are not a lot of hazards relating to the work specifically, and if it's a type of work that a person could complete with various, say, physical disabilities, then that would result in a less expensive policy, because even if the person sustained certain types of physical injuries, the person could continue working. And so as a result, the disability income insurance would not be triggered. So the type of occupation and whether injuries are more prone to occur, and if injuries are occurred, if they are more likely to preclude further work or not, will affect the cost of the policy. Hopefully this little brief video about underwriting has been helpful. Thank you for watching and have a great day.